Hello, good evening, my friends. I am very happy to see everyone here again. It's been a little bit over a month since we started our online live sharing classes, and many people have messaged me saying that they have indeed learned a lot of new techniques. They've gained a lot more of new experiences as well as skills. Now, I personally feel sorry that due to me being quite busy recently, our online live sharing classes have been reduced from 3 times to about twice a week. So I apologize once again to everyone. Now, of course, I am also honored to share more knowledge with everyone here, and I hope that each person can learn something after every session, whether it's from my own experience or learning from the market, learning from these masters that we've always been talking about. As long as we can learn knowledge that is truly useful to us, I sincerely hope that everyone can excel in the stock market and profit more for themselves. All right, so let's officially get started with today's lesson. So we're going to be jumping into our contents. So I want to be introducing to everyone what we're going to be going over this evening. So tonight, the content to be shared has been a little bit adjusted. So we're no longer going to provide analysis and the sharing of the individual stocks in our live sharing classes. If anyone has thoughts or needs to discuss specific stocks in the market, you can either message me privately or my assistant, and we will communicate with you as usual. To ensure the smooth implementation of our wealth growth plan and to achieve more profits, this week we will be participating in the IPO subscription of 2 companies. Now, of course, what's special is the IPO tomorrow and the profitability after listing, as well as the high chance of allocation after the subscription. Now, all of these are going to be guaranteed. Over these days, I have received some messages and feedback. Some people may not fully understand about this. Now, either they are not familiar with using the asset management accounts for a subscription, or they're not familiar with the concept of what an IPO is. Now, to be quite frank, whether you use your regular account or the asset management account for subscription, once you get allocated, it often signifies substantial or very high returns. So it is necessary to further share this information with everyone this evening. So we're also going to be sharing another master with everyone here. Now, this man is very, very deep in the stock knowledge of masters. Now, he came from humble beginnings. He was probably one of the best of the investors in this century. Everyone knows him as the number one man of each stock, and his name is going to be Jesse Livermore. Now, of course, titles like the number one of the century and things like that, they're not self-proclaimed. So we're going to be diving in, and we're going to see why he is so amazing and what we can learn from him. All right, so we got an action-packed evening. I'm not going to go too much onto the contents. So we're going to be jumping right into our macroeconomic news. Now, we always start with the analysis and sharing of major news and economic data, such as fundamentals. So as we all know, due to the markets in the US and the UK being closed on Monday, many channels have stopped updating economic information. So therefore tonight, the content we will share mainly focuses on domestic news from India. All right, so let's see what we have in store. Okay, first one. If BJP loses power, Nifty valuations can crash to pre-NDA level, warns UBS. So let's focus on the content about elections, right? The last day of the election is June 1st, and the counting of the votes will be conducted on June 4th. Therefore, the election will soon come to an end. Now, it is often at this crucial point that the election activities may cause some fluctuations in our market. So, global brokerage firm UBS has warned investors on Monday that if the ruling party, the BJP, loses in the ongoing Lok Sabha elections, the stock market will experience a severe knee-jerk reaction. Now, in the worst case scenario, stock valuations may even test the levels before the National Democratic Alliance. So, Pramal Kamdar at UBS Securities have said any unexpected results are likely to be initially seen as negative because political instability and possible policy paralysis could dampen businesses' sentiment and affect investor confidence. This could trigger knee-jerk reactions in the financial markets in the short term, with stock valuations possibly testing levels before the NDA. If the ruling BJP does not secure a single majority but forms the government with a majority, so that's over 272 seats, in the Lok Sabha elections with the NDA, confidence in policy stability may slightly decline as fiscal consolidation may be slower than expected. Historically, as Wall Street and businesses adapt to new government policies, any underperformance triggered by public opinion poll results often reverses in the medium to the long term. Now, to be honest, I am not sure where this bold prediction comes from. From my personal point of view, the BJP is unlikely to lose this election as the current government has led India through various reforms, continuously driving the Indian economy at high speed and further increasing the country's strength, despite some of the shortcomings. While I do not believe the scenario presented by UBS will occur, subjectively is being subjective and objectively is being objective, right? So therefore, until the results of the vote counting on June 4th, we will need to maintain a cautious attitude towards the market. So lots of predictions, lots of rumors going around about what happens if this dominating party loses. It is better to not speculate all these things and we just wait until the count is done. Okay, next piece of news. RBI to leave key interest rates unchanged in June. Monetary policy, says economists. Now, according to a survey by Money Control of 20 economists and bankers, the Monetary Policy Committee, led by the Reserve Bank of India, is likely to maintain the status quo in the upcoming June monetary policy, while exercising caution towards inflation. Most experts indicate that the central bank will maintain its withdrawal of accommodation stance, although two economists suggest that the central bank may shift to a neutral stance. That's very interesting. Now, at the time of the June Monetary Policy Committee meeting, the latest CPI, which is Consumer Price Index data, will be from May. So it's currently at 4.9% due to high temperatures, potentially putting upward pressure on perishable goods such as vegetables. The overall tone will remain cautious towards food inflation risks. Once the monsoon season is halfway through, or if the RBI introduces policies in August or October, the food inflation risks may become clearer. Nonetheless, the accommodative stance towards core inflation is expected to persist, projected to remain around 3% until the end of May 2024. In its April monetary policy, the RBI has kept the repurchase rate unchanged at 6.5% for the sixth consecutive time. Since the April 2023 monetary policy, the RBI has maintained the repurchase rate unchanged, which happened after signs of easing inflation. So what does this mean? So for the market, it certainly anticipates a rate cut to further boost the stock market. However, at least in the short term, this expectation seems likely to be unmet. So in my personal opinion, considering the current overall environment, even if the Reserve Bank of India cuts the benchmark interest rates in the future, it is unlikely to do it so before the United States. So our counterparty in the West, we all still kind of looking towards that market. I don't see the rates changing myself before they do. So let's just hang tight and see what they do in the foresee future. Okay. Last piece of news that we're going to be going over. Indian markets resilient against FII shocks, says Finance Minister Nirmala Sitharaman. So, from the perspective of the market funds, the continued outflow of funds by FII has brought some negative factors to the market. But the market trend is very positive. So, why is this happening? So, the finance minister said that Indian market is strong and healthy enough to withstand the impact of foreign institutional investors. She's also stated that due to smooth information flow, small investors enter the market regardless of market risks. When foreign securities investors withdraw from India, this trend has a buffering effect. There's no impact because these investors absorb the impact. Now, at the time, Sitharaman's statement, prior to the results of the Indian People's House elections, foreign investors had withdrawn INR 35,001 million from the Indian stock market this month. However, the benchmark index of the Indian stock market has still surged nearly 3% since April, reaching a historic high and surpassing a new milestone. The ongoing People's House election will be held from April to June 1st, where nearly 1 billion eligible voters will elect representatives for 543 seats in the People's House. To form a government, a political party alliance only needs a simple majority of 272 seats. Now, Sitharaman also emphasized that even during increased volatility during the elections, the Indian market remains relatively stable compared to international markets. She stated that this is positive development, that small investors can easily access information. The volatility of the Indian stock market has reached its highest level during this election period since the first phase began on April 20th. The volatility index has risen about 72%, exceeding the highest level during the 2014 elections. However, historically, volatility tends to decrease after elections, indicating that it may stabilize after the elections. So, even with the volatility caused by the current elections, the overall volatility in the Indian market is relatively low compared to foreign markets. So, everyone here, although in the short term, even with a strong upward trend in the index, the market's profitability effect has not increased significantly. Despite this, the Indian market remains positive and it's healthy. So from past, present to the future of Indian stock market, we're going to stand confident. Okay. Let's take a look at the domestic stock market in India today. So as I previously said, overnight the UK and the US markets were all closed with no international markets as reference. Today the Indian stock market's main stock market indices, Nifty and the Sensex, continued to experience a slight pullback. The opening was okay, with an upward gap at the opening, but throughout the trading day, prices mostly traded below the opening price. So in terms of the intraday movements, it was relatively weak. So today, financial services stocks supported the Nifty 50 index throughout the trading session. Meanwhile, oil, natural gas, and power stocks lagged behind. Now, currently, the earnings season has ended, and there's only 1 week left before the election results are announced. So this is going to make the market very, very tense. So this may keep volatility relatively high until the results are announced on June 4th. So in other words, in the next few trading days, the market is likely to operate in an oscillating manner. and intraday volatility may further increase. So let's take a look at our Nifty first. So today, the Indian stock market continues to bear pressure with the benchmark indices, Sensex and Nifty 50, falling for the third consecutive trading day. Now, nevertheless, we can only say that the Nifty index is somewhat uncertain. Although it has seen 3 consecutive trading days of highs and lows or gap downs, the market can only be considered as oscillating at higher levels rather than experiencing a true decline. After all, the bullish strength represented by the candlestick chart that broke up 3 trading days ago is still very strong. The recent weakness over the past 3 trading days can only be seen as a brief consolidation after the breakout or a profit taking at high levels. So in the next 2 to 3 trading days, the index may even further decline, testing the upward breakout from 3 days ago. Now, technically, the support below the Nifty index is around 22,800, with resistance near the 23,000 to 23,100 range. In the absence of significant stimulus from the news until the end of the elections, the price of the Nifty 50 index is likely to most remain within this range. So, what is the assessment of this index? Now, my personal observation tends to be that the adjustment seen over the last 3 trading days is healthy, or rather, it's reasonable, and does not represent anything significant. In the short term, which is within the next 2 to 3 trading days, the Nifty index is likely to retreat towards the support around the 22,800 to test its effectiveness. If the support holds, another round of oscillating upward movement may occur. Thus, currently the index is in a relatively lackluster phase, so there's no need to have too high of an expectation for this index. So that is how our Nifty kind of looks like at the moment, and with the elections going on, it's going to have high volatility. So let's jump into our Sensex now. Now, the Sensex index also underwent a downward adjustment today. So if we look at the chart of the Sensex alone, it is relatively bearish. Just by looking at the chart alone, you could make a judgment that it will continue to adjust downwards. After all, the high point of the index in the previous trading day was close to the upper trend line. And there's been several occasions where it adjusted downwards after reaching this trend line. However, can we make a judgment based on this now? Although it is not appropriate, we all know that the market is interconnected. So Sensex and Nifty 50 are both indices of the Indian market, so they need to be cross-validated. Through this validation process, we can further understand that the Nifty 50 index shows an upward trend after a breakthrough, and Sensex cannot move independently from the Nifty 50 index to follow its own separate market trend. Therefore, until the breakthrough in the Nifty 50 index is not completely disrupted, we cannot temporarily judge whether the Sensex index will continue to move towards a downward adjustment. Now, recently, due to cautious sentiment related to elections leading to a large outflow of foreign investments, the Indian stock market has experienced intense fluctuations in the absence of a new stimuli. Now, high valuations and mixed signals globally, the market has been swinging between rises and falls. The Indian VIX index, which measures the market volatility, has surged by 88% since May, indicating heightened market tensions due to the ongoing preliminary elections. On Tuesday, May 28th, the India VIX index rose by over 4% to a level of 24.2. So apart from the uncertainty related to elections, key macroeconomic indicators such as India's GDP data for the fourth quarter of the fiscal year US PCE inflation data and the inflation data from European countries will also impact market sentiment this week. So let's keep an eye on these developments. All right, so this is our brief introduction and sharing of our analysis of our two India indices. I hope this has been helpful. So let's continue to move on to the rest of our class. IPO subscription. All right, for all our members and all our friends here, in order to ensure the smooth implementation of our wealth growth plan and earn more profits, we will carry out the subscription of 2 IPOs this week. Now, of course, what's especially noteworthy is tomorrow's IPO. The profitability after listing and the higher chance of successful subscription after purchase are all going to be guaranteed. Now, as individual investors, our enthusiasm for IPO has soared. This enthusiasm is shared by investors in major economies around the world. Now, the fundamental reason is nothing but the profits and returns that a successful IPO subscription can bring. In the Indian stock market, this point is particularly evident as IPOs are even more popular. So firstly, in 2023, India had the highest number of IPOs globally. Secondly, participants in the markets all gained substantial profits. So why do we all come to the stock market? It's nothing but to make money, and it's able to reap more profits in a shorter period of time. So participating in IPO subscription can exactly meet that goal. Although the profits from successfully subscribing to an IPO are relatively certain and stable once you win the allotment, for individual investors, it's often difficult to win these allotments even if you participate in the IPO subscription. So this means that even if you clearly know where the profits are, you may not be able to earn from them. However, this problem no longer exists now. As you know, we have obtained a relatively large share of tomorrow's ZTech India IPO. But by subscribing through our asset management account, the success rate and number of allotments will far exceed those on regular security accounts. As for why our asset management account can achieve this, we provided a detailed explanation yesterday, so I'm not going to dive into it again. Okay, so some people may still not understand why it is said that once we are allocated in an IPO, it is almost equivalent to a certain profit, especially for some of the new members or the newcomers who have just joined the stock market. So you can take a look at this table. This table has already been seen by people who have been paying attention to our group messages. Now, this table can clearly tell everyone why IPO subscriptions can be said to be almost risk-free profit. This table is the statistical data on IPO profitability in the entire Indian market up to May 24th, 2024. There have been a total of 129 companies listed on the Indian IPO market so far in 2024, and their performance on the first day of listing is below. Now, I'm not going to repeat the specific data. You're going to understand once you take a look at it, but you need to know 2 important pieces of data. Number 1, the profitability of an IPO stock doubling on the first day of listing is as high as 25%, which is very impressive. So let's not talk about profits of over 300%. Just think about a 100% profit. How long does it usually take in a normal stock trading to achieve these margins? Point number 2, the proportion of IPOs can be profitable on the first day of listing is as high as 87%. Although it's not 100%, at least it can be said that participating in IPO subscriptions, once allocated, it's almost equivalent to instant profit. So when applying for an IPO, in-depth research is conducted on the company's fundamentals, its operational capabilities, profit-making abilities, industry outlook, and so forth. Now, does it imply a 100% certainty of profit? As for the two IPO allocations we discussed this week, as mentioned before, we received a relatively small allocation for the VLS Transcore IPO, and the probability of being allocated is not too high. As for the ZTech India IPO, which opens for subscription beginning tomorrow, the chances of being allocated and the rate of return will be higher. So, why do I say that the returns on ZTech India IPO will be higher after listing? So, let's take a look at the company's information itself and their subscription targets, right? So, ZTech India Limited, ZIL, initially designed civil engineering products and services that has the most advanced geotechnical technology solutions in the field of infrastructure and civil engineering projects in India. It includes a range of technologies, methods, and techniques aimed at optimizing the performance and stability of above ground underground structures. The company is actively involved in the field of waste management with a focus on building theme parks using recycled waste material. Now, at the same time, the company is committed to implementing innovative wastewater management solutions for industrial units using cutting edge GEIST technology. Now, this dual commitment emphasizes its holistic approach to sustainable practices, converting waste materials into recreational spaces while effectively managing industrial wastewater through state-of-the-art technology. So, ZTech is dedicated to providing customers with innovative, safe, and environmentally friendly engineering solutions. And that's been kind of the topic of this decade. We're trying to go green, we're trying to recycle, we're trying to get rid of wastes, right? Now, the company is engaged in sustainable theme park development, industrial water treatment, and geotechnical technology solutions, creating a very, very niche market. Now, currently, the company is mainly focused on sustainable theme park development, which is a high profit category that accounts for over 60% of this company's revenue. The main work of the theme park division has boosted its revenue and profits for the fiscal year of 2024. The company's ongoing projects are valued at over 16.8 billion rupees, and with more projects in their pipeline. So ZTech India's revenue grew by 160.28% between the fiscal years ending on March 31st, 2024 and March 31st, 2023. So within that 1 year span. Now, while the profit after tax increased by 269.44%. So as of today, until 458, its premium in the GMP or the gray market continues to be as high as 59.09%. Please note that this is the situation before the IPO has even started its subscription process, and the premium has already reached this level. So my profit expectations for this IPO after listing is 200%. Now, is this going to be difficult? To me, I don't think it's going to be difficult at all, and I'm going to show you why I might be right. So, we just mentioned about this company, the important line of the business, which is the sustainable theme park development, which accounts for 60% of their revenue, right? So I'm going to dive in a little bit and give us more of an idea of what this company is about when we talk about these theme parks. Now, for the company, the Habitat business vertical provides a compelling proposition covering the conceptualization, design, planning, development, and operational management of urban park based on environmental awareness, social welfare, and theme public art. Parks are the natural embodiment in urban landscapes, providing refuge for local biodiversity, green leisure spaces, public art wonders created using recycled waste, and immersive experiences with carefully planned activities and various culinary flavors. Now, the company considers it a great honor to bring these experimental green havens to local communities and collaborate with city management departments to help reduce their carbon footprint and enhance their contribution to the nation's commitment to the United Nations Sustainable Development Goals. Currently, the company has built 7 thriving urban green havens based on unique themes and immersive experiences, recycling and reusing over 5,000 tons of waste, significantly reducing the carbon footprint associated with urban development. Due to the layout of images, you can only see 6 here, of course, but this isn't the focus. The key point is that this is a high profit category, accounting for over 60% of the company's revenue. So why wait to subscribe to the IPO of such a company that not only operates excellently and profitably, but also has a very broad development prospects? They design fun theme parks. They are controlling waste. They are trying to leave a better carbon footprint behind. These are all positive things, and you can tell by their revenue. Local people are supporting this kind of business. They are going out, they are doing everything they can to make this world a little bit cleaner. Okay. So, outside of just the theme parks, another very important side of the company is in regards to their wastewater management. Now, Geist is a company that handles all these factors, or Geist, when it comes to recycling and cleaning the water. So now Geist is a technology company focused on research and development that provides specialized wastewater treatment and management to a variety of industries where water is a necessary component of manufacturing processes. So we are one of the few technology and research companies in India that focuses on the environmentally friendly technological solution for treating industrial wastewater and recovering chemicals from these wastewaters. So there's 2 crucial steps to avoid groundwater pollution. So this company's forward-thinking solution supports a paradigm change in water management techniques while protecting the environment, which is super crucial in this decade, right? They make it possible for enterprises to adopt ecologically responsible wastewater management techniques, adapt more quickly to changing pollution control laws, and revitalize the industrial wastewater. So these provides cutting-edge techniques for treating industrial wastewater that unlocks value through recovered chemicals and provide high quality water for reuse at the lowest possible cost with the best operating benefits above traditional systems. Now, the idea of wealth out of waste is transformed by this strategy, which emphasizes the ethical and the sustainable handling of the industrial byproducts. 4 years of working together with more than 6 of the prestigious clients to enable regulatory compliance, integrate environmental awareness into the business operations, increase profitability, and recycle more than 517 million gallons of water. So that is amazing. They're taking all this bad water, they're making it more reusable, they're recycling the water, which is just all good points. Now, a little bit of how it works. We're not going to dive too much. They have different ways of doing things based on how you want to clean the water. For instance, industrial solutions, they deliver sustainable technological solutions tailored to the unique needs of various chemical industries. So depending on what the chemical industry needs, they provide it, right? Wastewater management. So they enable zero liquid discharge by implementing highly efficient and effective sustainable technology, whereby the wastewater can be recycled back to the parent process to achieve ZLD. Now, these are just a couple of examples of what they do, and for this company, right? So they got the theme park on one side, they're trying to change and help the world on one side. To me, this is what everybody's kind of looking for when it comes to investing in companies in this era now, right? Everybody wants to know if how is the company going to help make the world a little bit cleaner. They're always asking how green is it. So these are the kind of things that really stand out to me. So moving forward, okay. So now we all know that in usual circumstances, everyone applies for IPO in their own securities company's regular account where the allotment rate is very low. Now, the main reason for this is on one side, the institutional reasons. So SEBI stipulates that the retail allocation for IPO is 35% of the issue size, which is the maximum allowable value, with basically another 10% quota size, which is even less. So, guys, think about it. All individual investors in the Indian market can only fight for 35% allotment of the IPO shares. And currently, the investor base in the Indian market is very large. So, naturally, the allotment rate is going to be very low. Although this regulation is unfair to retail investors, rules are going to be rules, and then everyone must comply. However, since the market has closed one door for us, it has also opened another door. So, in compliance with relevant regulatory requirements, using our company's asset management account to apply for IPO, we have unique advantages. Now, this is mainly reflected into 2 points. So, number one, as an institution, we have the opportunity to apply for higher IPO quotas, but generally, institutions that can underwrite exclusively are relatively few. After all qualifying underwriting institutions are vying for this portion of resources. As an institution, while applying for IPO quotas, we mainly cooperate with other underwriters to obtain relatively more quotas. So compared to regular security accounts, our allotment rate will be relatively higher. So just like tomorrow's IPO subscription, when applying for the IPO, the allotment rate will also be relatively higher. Of course, it is important to note that although the allotment rate is relatively high, when applying through asset management accounts, the amount allocated is determined by a random draw. It is not guaranteed that if you expect to be allotted a certain amount, you ultimately receive that amount. So everyone who apply will definitely have varying degrees of allotments. Some's going to receive more, some's going to receive less, and some will not receive any at all. But I hope everyone can understand this point. With us, you have a higher chance of winning allotments. Number two, asset management accounts have another advantage. As our company is a foreign asset management company, you do not need to lock in funds before applying, meaning you just need to have our asset management account to apply, and the final amount to be paid is based on the allotment. If not allotted, no payment is required. Now, this amount needs to be topped up before the listing day, though. So I'll say it again. The allotment rate and returns of ZTech India IPO tomorrow is going to be higher. For members who need to participate in the subscription, you can directly apply through the asset management account. Also, please note that although the overall probability and quantity of allotment is higher when applying for IPO through asset management accounts than through your personal accounts, the success rate and quantity of allotment are randomly determined based on the individual account's funds and amount applied for. So keep that in mind. Okay, so we're going to stop talking about the IPO for now. I want to continue to share about the first person in American stocks for a century, Jesse Livermore. Now, I want to go over his relevant deeds and the achievement he once made in the stock market and how did he manage to do it. So, who is Jesse Livermore? So, Jesse Livermore, born in July 26, 1877, all the way until November 28th, 1940, was an American tycoon on Wall Street, described by Time magazine as the most fabulous living U.S. stock trader. Now, sadly, on November 27th, 1940, Livermore committed suicide by gunshot. So his death puts an end to an era. That is what New York Times put. So the New York Times could not anticipate that Livermore era had not ended. So a loser who ended in bankruptcy in the fast-moving gold dust of over half a century after his death, unexpectedly gained the title of the first person in American stocks for a century. Now, who was he exactly? Why is it that despite his suicide due to failure, he is worth our study? Okay, so an authoritative economic publication once conducted an anonymous vote on the figure that has influenced global capital market for 200 years. The winner was not the renowned investment giants like Buffett, but a lone individual who traversed bull and bear markets, whose entire life's earnings came from the capital market, the most tragic speculator with 3 rises and falls in his lifetime, Livermore. Now, since the age of 15, Livermore entered the capital market, starting from being a chalk stocks boy, making continuous gains in small exchanges before the age of 20. Now, at one point, being listed on a blacklist earned too much and losing all his savings at the same time at the New York Stock Exchange. Only able to make a comeback with a loan from a brokerage company with $500. Now, in the financial crisis of 1907, Livermore, who had suffered great losses and gains before, had already made precautions. On October 24th, 1907, he made a profit of $3 million, causing a crash on Wall Street. So this became a chain reaction. The financial tycoon JP Morgan, personally called and met with Livermore, requesting him not to continue short selling to avoid triggering a large-scale crash. Now, before the biggest financial crisis in global history in 1929, Livermore had incurred losses in cotton futures, but he foresaw the possibility of a financial crisis in advance and made thorough arrangements and decisive operations, earning $100 million in this financial crisis. In a year when U.S. tax revenue was only $4.2 billion, this shows that $100 million at that time could be completely different concept from $100 million now. So after that, Livermore owned one of the most beautiful offices in all of New York, located at 35th Avenue, complete with a private elevator and doorman, and of course, tastefully decorated. So he had a taste for luxury. Now, although Livermore's life ended in suicide, there were many rumors suggesting that he had already gone bankrupt at that time. However, these were all false rumors. When he was earning well, he had already set up measures such as trusts, insurance, and asset protection for his family. So even if they were risks later on, it would not affect the future cash flow of the entire family. What truly led him to end his life was the discord within the family and depression. Now, there are 3 books that's related to Jesse Livermore. These are financial novels such as Reminiscence of a Stock Operator, which is based on him as a prototype, the biography of Jesse Livermore, King of Speculation, and his personally written How to Trade in Stocks. The most famous one is The Reminiscence of a Stock Operator, which is considered an investment classic by both speculators and value investors. Now, this is very rare because What value investors consider a good book, speculators often look down upon, and vice versa. At the same time, it is a rare book that you can never get tired of, and each time you read it, you will have new insights and experiences. Now, of course, different people will have different takeaways from reading this book, so even the same person will have different insights at different stages. I think this is the charm of the book and also the charm of speculation business. To this day, Reminiscences of a Stock Operator remains the investment Bible of the top contemporary traders such as Bond King, Bill Gross, who reads it whenever he is puzzled and always finds solutions, sometimes leading to epiphanies. The trading wisdom of Jesse Livermore can be seen reflected in the likes of the American investment master William O'Neill. Now, Livermore's trading wisdom is evident in these three books. His trading methods are suitable for compounding trades and the path to wealth growth. Regardless of risk control and timing in trading, his strategies and methods are more suitable for individual traders because most individual investors are at a disadvantage in capital and information. They cannot solely rely on faith to participate in a market that is evolving. Meager capital is like having only one bullet. If you lose in a battle, you will often find yourself struggling for half a lifetime to get out of that predicament. So this is why I recommend Jesse Livermore's books to everyone. Not to imitate him, but to learn from his strategies and successful experiences in the stock trading game. Okay, so the revolutionary trading strategies of the genius Livermore are still used by people today. His trading strategies were gradually formed through his years of stock trading experiences. Now, some of the most important strategies can be summarized as the follows. So readers interested are advised to read the original work, as his trades and thought strategies are far more than just these, right? Okay, so we're going to be talking about some of his trading strategies, and we're starting off with the first one. Speculation should be viewed as a serious business, and one should be dedicated and professional, not belittle oneself or follow the crowd. This is Livermore's view of speculation as a career. So he said, I can't remember how many nights I tossed and turned in bed, reflecting on why I didn't foresee the arrival of a market trend. The next morning, I woke up early, came up with a new idea in my mind, and couldn't wait for the daylight to rush to verify the effectiveness of the new idea through historical market records. Now, this was a statement once made by Livermore, right? This is what impresses me the most, and it is portrayal of the investment master's personal dedication to the speculative industry. We should all note that in any industry, the natural law is the amateurs cannot surpass professionals. To achieve certain success in the industry, one must invest wholeheartedly and at least become a more professional individual. Point two, making big money is not about the fluctuations of individual stock prices, but about the main trends. I keep saying this, it's always about the trends. This means relying not on analyzing individual stocks, but on evaluating the entire market and market trends. It is rare to find someone who can judge correctly and stay put at the same time. Livermore discovered that this is the most difficult thing to learn, but only a stock operator who truly understands this point can make big bucks. In fact, many people, when they come to understand this point, often have biases, thinking that as long as there is a bull market, they can just buy stocks with their eyes closed, which is definitely not the case. Livermore's main purpose in expressing this is to tell us that overall trend is very important, just like the current stock market in India. Everyone knows that the bull market in India market has been going on for 2 to 3 decades. Is there any successful investor who bought stocks with their eyes closed? Absolutely not. However, in a super bull market like India's, we must seize the opportunity. In fact, stock market investors in India are fortunate because not everyone can encounter such opportunities even in their lifetime. So a very clear example is the Chinese stock market. Just take a look at the stock in China to understand how fortunate individual stock investors in our Indian market really are. Point number 3. When operating, you must follow the leader. There is no need to consider where other stocks are heading. Does everybody understand this point? This is a supplement to the previous point. While we focus on overall trend, we must also need to pay attention to excellent individual stocks. Only when the overall trend and high quality individual stocks align can you have the possibility of earning profits more easily. Now, according to Livermore's view, the focus on investment should be on leading stocks in leading industries and strong industries. An important feature of leading stocks is breaking through resistance areas and creating new highs first. To maintain flexibility in thinking, remember today's leader may not be the leader 2 years later. Just as women's clothing, men's clothing, hats, artificial jewelry always change over time. The stock market also constantly discards past leaders with new leaders taking their place. Stocks that were leaders in previous bull markets are unlikely to become leaders in the new bull market. So this makes sense because changes in the economy and business conditions will create new trading opportunities with greater expected profits. Now, of course, the current market environment is different from that of the past, but the principles have not changed. Everyone needs to be flexible in their learning process. Point number 4. Starting correctly is very important. Resolutely implement the pyramid buying principle on upwards. Now, remember, stocks will never be too high, so it's high enough to prevent you from starting to buy, nor too low to prevent you from starting to sell. Starting is very important. Profits obtained from speculation all come from those positions that have been profitable from the beginning. After the first trade, do not make a second one unless the first one is profitable. If your first trade is at a loss, never continue to follow up. Never average down losing positions. You must deeply engrave this in your mind, and we've talked about this. Averaging down is not good. Only continue to buy more shares when the stock prices keeps rising. If you're shorting downwards, only add more positions along the way when the stock price meets the expected downward trend. Now, Livermore likes to short stocks that are hitting new lows in prices. Point number 5. Firmly execute the stop loss rule. Now, Livermore kept his initial losses within 10%. Everyone needs to seriously consider this point. The 10% is not an exact number, might not be suitable for everyone, but when using it, you also need to pay attention to the distinction. So for example, is it 10% of the stock price or 10% of total funds? Everyone has their own criteria, so ultimately find rules and standards that suit yourself. The only choice to ensure the continuation of a speculative business is to carefully guard your capital account and never allow losses large enough to threaten future operations. As long as there's green hills left, there is no need to fear running out of firewood. Profits always take care of themselves, while losses never automatically disappear. Controlling losses and allowing profits to run, this internal rule into the speculative market, is eloquently expressed by Livermore. So this leaves a very, very deep impression. All right, so let's take a look at the last point. Avoid buying low price stocks. Big profits are made in large price fluctuations, not from those low price stocks. Furthermore, there is another reason. Truly good companies, excellent companies, often have stock prices that are not very low in absolute value. Additionally, low price stocks usually cannot accommodate large fund transactions. In the market, there are experts summarizing Livermore's trading secrets. They believe that a successful trader should always learn 3 major things. Number 1, market timing. Number 2, money management. Number 3, emotional control. It is emphasized that the biggest issue traders must control is their emotions. Emotional control being the most important factor in the market today. Now, regarding these three things, we're not going to go and share them today. We'll have a chance to explain and elaborate them in detail later on. So, this is going to wrap up our evening tonight. So, another cool legend that we're going to be learning from, taking some secrets or some tips that he might use. And still, to this day, everybody is still learning, still utilizing his strategies, right? So, that is all we have for today's online course. If you like, please go over the content again. Take some of these tips, apply it to your real life trading strategies. Our next online class is going to be Thursday, May 30th at 8 p.m. I hope to see everyone here again. Thank you very much to all my members and friends for their strong support, and I'll see you all next time.